Breakdown on EU for a trade that I took on the Tuesday the 15th of April, which was yesterday. Going to break it down and yeah, let's get started. So following on from my weekly analysis, I explained why I was looking at shorts. I explained why I was looking at shorts on this, and just to quickly go over it. I was looking for shorts on this, even though we've been so bullish, for 3 months now, we've been so bullish. I'm looking for shorts because this was my monthly range, strong low, weak high. This was all internal range liquidity, and then this was imbalance fill price action. So price came in to fill this imbalance and then pushed up, took out all this internal range liquidity, and then pushed up and took out external range liquidity. So my range, this range cycle right here, was done. It's been completed because we took out internal and then we took out external. And my strategy is internal to external, and then once external's taken, we create a new range and we come take internal, and then possibly come and take external again. So I am looking for shorts to come and target internal. So that was my plan. Now I didn't give much in the way of like entries because I didn't know how it was going to set up, to be honest. I didn't know I didn't know where we were going to turn bearish, but what I was looking at the time was we were still bullish inside of this range, so we could still get that push and come and take out this high. So but I'm looking for shorts, so that's my bias and that's what I'm going to stick to. So let's just, without going into, let's not go into that just yet. So I was also look, if you were bullish on this, you'd be looking at this thinking strong low, weak high, mitigation, long to come and take out this. But you have to ask yourself, where are we coming from? I mean, this is fine, to take down here before we've taken out the external of the monthly range. But we've just taken out external and we've created a new range. We've created a range from this high to this low. And then we took out internal range liquidity. So once we took out internal and we got this big push down, we now have a new range from here to here. But the target is this external range liquidity of this range, because we've just taken out internal and now the target is this external range liquidity. But yeah, 1 second. So we've taken out this, we've created this range from this high to this low, so there's a good chance that this is going to get taken and also this is going to get taken. Sorry. So all I'm doing is playing the ranges. So you can see on the hourly, we took out this liquidity, we broke structure, we had this big push down, and the price came back, and we filled this imbalance, we mitigated this block. So following order flow, order flow is intact. We came back to mitigate. We created this range from this strong low to this weak high, and that is what I was playing inside of, with the overall understanding that I'm bearish, targeting this, and yeah. So yeah, that's why I was bearish. That's the range I'm looking at. If we just break it down, now I dropped down to the lower time frames, but it's not to just trade the lower time frames. It's, I'm inside of this hourly range, but I want to see the detail. Like on this time frame, on the hourly time frame, it just looks like consolidation. It just looks like consolidation, and then it drops. But if you drop down to the 5 minute, you see the detail. So it's not necessarily dropping to the lower time frames for the sake of it. You see the detail, inside of this hourly range from this red dot to this red dot. What's inside of this? Look, you have internal range liquidity, you have equal highs right here. So, and then what happened is I was very close. I was very close to executing on this trade. But then I think a little bit of experience kicked in, because I've been trapped in this before. I've been trapped in this before, and the whole job as a range trader is to find the trap inside of the range, and this was it. this was the trap inside of the range, and this was the trap inside of the range. So as range traders, the plan is to find the trap, and then, you know, in this example, in this bearish example, is to find the trap and then short above the trap, you know, because you can clearly see what happened. That we had this was the range from this high to this low. We had internal range liquidity. Price pushed up during Asia, mitigated this block, which is I suppose people call it a smart money trap. But there was supply and demand, support and resistance. You know, people get into these shorts thinking they're in a fantastic trade, and then what happened? Came and took everyone out, built up all this liquidity, took everyone out, and then the move happened, you know. So, and I did very nearly fall for it, because I was very close to executing on this, because I was like, okay, this looks good, you know, it's an unmitigated area, has this liquidity just here, you know, we could be in this range from here to here, and then we take out internal, we take shorts to come and take that, and then we take a stop because it just came and took that. So yeah, I was glad I stayed out of this one and decided to take it above it, and it played out. So yeah, I got triggered once we come back up here, and then held it for, I'll tell you what I did actually. I took 0.5% risk. I took 0.5% risk on this whole trade. Once we got to 1-to-1, I took half off. I took half off, and then so that was, I was risking $500 on the trade. I took half off, so I was then break even, keeping my stops where they were, and each hour was then 250. So the trade ran 5R. Trade ran 5R. So that was 1250 plus the 250 that I closed when it was at 1-to-1. So it was a $1,500. Or a 5R trade. So yeah, pretty pleased with that. And you know, what am I expecting now? It's a bit of a tricky one, to be honest. It's a bit of a tricky one because we are still inside of this bullish range. You know, the reason this made sense is because, look, if this was going to push up and take out the high, then no strong low should get broken. And look what we did, we broke. So there was a very good chance that this was going to get taken as liquidity, because we should have, if we were going to keep going bullish, we should have respected this and then kept pushing bullish. But we didn't, we broke. So this made sense to get taken. So the shorts made sense at this time. But right now, you know, the shorts, you know, this could be the trap inside of this range from this low to this high. So this could be the trap, and we keep pushing bullish because we are still inside of this leg. So it's a difficult one to start saying, oh, I'm going to short from here. I'm going to short from here, because we don't know yet, because price hasn't taken this low yet. So me personally, I'm just going to wait. I'm just going to wait to show me something, and I reckon by the end of the day we'll have a good, you know, we'll have a good idea of where price is heading. So yeah, just going to wait. But that's my trade. Yeah, that's my trade that I took, and pretty pleased with it. Pretty pleased with how it went. You know, the only thing is, I could have possibly held down to this, made it a 7 or 8R. So I could have done that, but yeah, I just closed out at 5. Yeah, that's it from me. I'll catch you all later. Goodbye.